Plenty of reasons to refinance your home. Better rates, lower monthly payments, and getting rid of private mortgage insurance are just a few of them. But there are times when refinancing is not the best financial decision. Stay tuned to find out 4 big reasons not to refinance your mortgage. Hi, my name is Billy Bryson with Bryson Team Real Estate and Home Loans. And if you're new to my channel, please make sure to subscribe, like this video, and leave a comment below. Also, if you or anyone you know is considering making a move or refinancing, please give me a call at 562-248-6161. Pass on my number, or you can visit my website at brysonteam.com for free, helpful real estate and loan information. So, when is refinancing your home mortgage loan not a good idea? Here are 4 big reasons why not to refinance your mortgage. Number 1 would be to lock in a rate that is only a fraction of a percentage point lower than what you currently have. You'll have to pay closing costs when you refinance, and closing costs typically amount to thousands of dollars that are built into your new loan amount. So if you're chasing a new rate that's only a fraction of a percentage point lower than what you currently have, then it could take you a long time to save enough over the monthly payments to offset the closing costs. The rule of thumb is that you should only refinance if your rate will be at least 0.5% less than what you're paying now. So if you currently have 3.5%, for example, then you should only consider refinancing if you can get a 3% or lower. Another way of looking at it is that you should be able to break even within just a few years. Number 2 reason not to refi would be to move into a longer term loan. If you only have 20 years left on your mortgage, for example, it may seem like a good idea to refinance into another 30-year mortgage by stretching out the remaining terms or the remaining payments over even a longer period of time. Your monthly payments would be lower, but I usually don't recommend this strategy, especially if you plan to stay in the home for long term. You'll be making payments on your home for longer, and you'll end up paying more interest in the bank by extending your loan to another 30-year term. And if you are considering paying off your home as part of your retirement plan, it is probably not a good idea to create a brand new 30-year mortgage. It's always better to either maintain your current payment, or if you're going to refinance into the same amount of years you have left, or even consider a lesser term. Consider maybe a 15-year term, especially if the rate is low enough where you can keep the monthly payments almost close to what you're paying now and reduce the term. You'd be much, much better off. Number 3 reason not to refinance would be to go from a fixed rate mortgage to an adjustable rate mortgage. When you apply for a mortgage, you choose between 2 basic types of loans, fixed rate and adjustable rate, an ARM. Fixed rate mortgages lock in your rate for the entire life of your loan, and ARMs lock them in for just the first few years, and then they'll change periodically. Adjustable rates typically start lower than fixed rates, so you may be tempted to refinance from a fixed into an ARM just so you can get a low rate for, maybe for the first 5, 7, or even 10 years, and have lower monthly payments in the short term. But I would never suggest refinancing out of a current fixed interest rate into an ARM simply just to reduce the monthly payments, because even though it's fixed for a period of time that you can measure, you really don't know where the economy will be once that loan begins to adjust. So by refinancing into an ARM, you risk maybe paying more later. The number 4 reason not to refinance would be to spend cash on unnecessary purchases. If your home has gained value since you bought it, a cashed out refi may be a good way to tap into your home equity and pocket money for other expenses, but you should think carefully about which costs are worth refinancing and which are not. If you're going to cash out to consolidate debt, lower monthly payment by ways of spreading out the payments or reducing the interest rate, then by all means, a cash out might make sense. If you're looking to invest in another property that will outperform its current placement, then absolutely. If you're looking just to go away on vacation or do something frivolous, it's probably not the best way to spend your hard-earned equity that you've built over the years. So ultimately, it's going to be up to you whether an expense constitutes refinancing, getting cash out. Just be sure to weigh the pros and cons. So there you have it, the 4 top reasons or 4 big reasons not to refinance. Once again, my name is Billy Bryson, Bryson Team Real Estate and Home Loans. And if you or anyone you know is considering making a move or refinancing, please give me a call at 562-248-6161. Pass on my number, or you can visit my website at brysonteam.com for free, helpful real estate and loan information. Thanks so much for watching. I hope you found this information helpful. Please make sure to subscribe, like this video, and leave a comment below. Have a great day. Bye-bye.